Hello, everybody. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns, because we're not too sure whether there's a real virus going on anymore, even though we're seeing cases go up. A lot of social distancing has gone out the window. Who knows what's going on these days? Anyway, I'm Randy Patrick, putting the realism back in real estate for you guys. Hope everyone's doing well. Haven't put a video out for over a week. I literally just felt that there were other things going on in the news that probably were a little more important than talking about housing. So I figured I'd give it a break, and it was an interesting week, and I hope everyone is safe and sound and doing what they need to do, and et cetera with their lives. So gave me a time to do some interesting work and do some research on a number of things and really create kind of my blueprint going forward. So if you can see it, that's behind, that's my it's my real estate empire behind me right there on the big yellow piece of paper. So kind of working on that as to what I'm going to do and what the plans are for the next few months, year basically, because it's going to be crazy in the world of real estate. So having said that, if you're not already a subscriber to my channel, if you'd please do me a favor and subscribe to help my channel grow, that'd be great, because I'm going to bring you a lot of great content and a lot of great information here on Housing Bubble 2.0. So again, lots going on. Today I'm going to take it a little differently now. I'm not really going to do much of a news thing for this video. I thought it was time to lay out some information as to what has been going on in the marketplace from the foreclosure perspective, so everybody sees what's going on out there. To be quite honest with you, a lot of people, I can see some of your comments. Number one, either you don't believe there's a housing bubble going on. Great, you think what you want. It doesn't really bother me. But the point is, I see people sort of saying, I still see prices rising in my location, and I still have low inventory. So what gives? When's this bubble going to pop? What's the scoop? Well, it is difficult, and I think it all is it's a timing thing, and we have to wait for it to for it to play its course, run its course here, and there will be opportunities coming up very shortly. So hang in there. I know that people that have to buy, again, I want to be clear here on this channel, is that I'm not telling you to do anything. In other words, I'm trying to give you the best information possible. I don't push people to buy or push people to spend their money. If you need to buy, cut the best deal possible you can. Leverage everything you can. I can certainly help you with some of those talking points if you'd like to engage. That's fine. I have no problem talking to people. I do think there will be some opportunities on many different levels in the near future, and we'll take a look at those now. Okay, so give me a second here while I just move to the next slide scene here. All right, so here is a bunch of blue dots. All right, so what's so cool about blue dots? Well, these represent the amount of foreclosure auctions that will happen at some time in the near future in Los Angeles County. I'm going to go over a few locations today, but the point is to show everybody that there's stuff out there, okay? There's things, and these are all, some of these could be off market, some of these could be listed with real estate agents in the MLS, but the point is there's a lot out there. So this map that you see is only showing, it's, again, I couldn't, if I kept drilling down and enlarging the map, you'd lose the sort of impact of this. This is only showing 500 of about 1,600, we'll call it, bona fide foreclosure auctions that will occur very shortly, in the near future. All right, so these are properties. So there's about 1,600 properties right now in Los Angeles County that are scheduled for auction. LA County is a big county, a lot of population, a lot of properties, but it's a fair amount of homes sitting there. And I can guarantee you that the majority of these homes are not listed in the MLS, and they're sitting there, and the homeowners are just doing the best they can, probably trying to stay in as long as possible and putting off decisions until the very end. What's going to happen with these homes? Well, some may be sold because there could be some equity. Some homeowners may declare bankruptcy and postpone the inevitable even longer. Most of these will just fall to foreclosure, and they'll get scooped up either by third-party bidders at the auction or will be taken back by the lenders, which is a shame, as a lot of these properties could, help people, with their property needs in Los Angeles County right now. Okay, that's LA. Let's go to the next slide here. Oh, whoops, sorry guys, I clicked twice here. All right, Phoenix, Arizona. All right, now different data, not let me backtrack here. Each state has its own foreclosure process, so not every data is the same, not every process is the same. So it's whatever I can pick off via the various software systems that I subscribe to. Well, this is Phoenix, okay? So this is again showing about 500. Now I don't think you'll count 500 dots, but there's a lot of overlay there. But the point is, when I did the search on this is what it brought me was the first 500 of about 1,400 auctions that are waiting to go in the city of Phoenix. All right. So that's a lot of properties, for Phoenix itself. And, I same situation, most of these are probably occupied. They're with homeowners. Some may be listed. Most are not. And, what's the exit strategy? What's the exit plan for the homeowner? But the point is, there is volume here. And I want to make sure people understand that. And I'll talk more about this, but this is pre-COVID. So this has nothing to do with what we've seen and some of the issues with mortgages and stuff over the past 6 weeks, 2 months. This is stuff that was already bubbling up and sort of, getting ready to sort of, we'll call it transact or happen, in that marketplace. Okay, going back to the next slide here, there's Las Vegas. So if you look at Las Vegas, a little different here because they don't have many auctions scheduled because there's probably a couple hundred auctions that are scheduled, but we've got this is 500 of about 1,600 pre-foreclosures. So these are people that have received the notice of default, and yes, they will eventually get a sale date, but there's an opportunity right there there's somewhat 1,600 of these right now in Las Vegas, and they're sitting there doing nothing because what's going on? Well, the lenders, there's a government moratorium on foreclosure sales, so very few sales are going through, number one, and two, many of the court houses or the systems in local counties, they're not processing foreclosure complaints or notice of sale or notice of default. So like a lot of these properties are in limbo doing nothing, just sitting there. So again, a great opportunity to maybe jump on those because the window is there. They're sitting there doing nothing while we're waiting through this moratorium. So again, Las Vegas, we all know that Vegas is overpriced. We've seen a little bit of decreasing, but when you take a look at about 1,600 pre-foreclosures, same thing. If 300 or 400 of those foreclosures hit the market as active sales, that's going to bring some relief to a lot of buyers. And it's going to help push down property values. So my point to showing you guys this is the fact that there is potential inventory out there. I call this part of the shadow inventory because it's going to be transacted upon, whether it's a sale, whether it's a short sale, whether it's a foreclosure sale, whether it goes back to the lender, comes back as an REO, etc. So it's all this stuff that we can't really get at yet without doing marketing or acquiring or discussing, with the homeowners, etc. But the point is, there's stuff out there right now. So this could be impacting your local market and helping people, with better priced properties or more selection, more choice of properties. And we all know that if this stuff came out, this would basically help reduce price points across the board. So again, I just want to show you that there's volume there. It's like either a geyser or a volcano, right? We've got all this pressure building underground, and more of these things are waiting to hit to basically hit the market, hit the foreclosure process, hit the auction block, etc., and then more will become available to us all. So that's Las Vegas. If I go over here, let me do another okay, this is interesting. This is Denver, Colorado. So this is a different look. So the software I showed you there is a different software, and that's a subscription-only software, so I can pick off the data. I can go into the individual properties, but I can see volume and statistics and trends, which is kind of cool. This is a website that's available to anybody, especially the next couple. And this is really, it's a foreclosure calendar website. So really, if you take a look at, the kind of highlighted column there, that's just an example of May. So I really went through April, May, and June, and I kind of tallied up the scheduled auctions that were going to happen over the next 3 months. You can see that clearly foreclosure auctions in Denver only happen on Thursdays. But, these auctions, these are postponed. So if you were to click on one of those Thursdays and look at the detail, the property scheduled for auction that day, you're going to see canceled. Why? Because a lot, again, the HUD, Housing and Urban Development, some of the lenders, states, governments, whatever, they canceled foreclosure auctions. So some auctions were canceled on specific properties that were investor-owned, that were government-backed, investor-owned, and then other properties may have been canceled as well too due to the pandemic, the COVID-19 pandemic. So, I sort of estimated based on the numbers that we've probably got about 650, foreclosures that were ready to go to auction. Basically, they're being delayed right now. So that's what's in Denver, which is a pretty decent number for the city of Denver. What else we got going on here? All right, Miami. So I can pick off sort of the same information out of Miami. Same thing, based on what I looked at. I estimated around 1,050, 1,060 postponements in Miami-Dade. Not just City of Miami, it's Miami-Dade. You can see it's Miami-Dade Clerk of the Court. And again, this is a public website, so you can literally click on this website, click on one of those calendar auction days, and it'll bring up the folios, or like the legends of what properties are going to auction that day, and you can then click on it. And if the folio is active, what it's going to do is going to take you to the property appraiser site. And you can see the property address, information, the whole bit. So the information's there. Obviously, you have to mine it to go after it, but that's what goes on. Now, just as for a fun fact, everything's in blue on the foreclosure sort of sale dates that have been postponed. The sort of orangey yellow block there, on the Thursday, that's a tax deed foreclosure. So some states separate mortgage foreclosures, which is what I'm talking about, but they also have separate auctions for tax deeds, which is a different setup here. That's that your property can go to a tax deed foreclosure auction for unpaid taxes after a number of years, and whether there's a long story that goes behind, but that's another way to look at properties. So there's less of those, of course, these days, but still an opportunity to pick up properties at cheaper prices. So that's what we got going on in the Miami-Dade area. And if I take a look at my area, the Tampa area, so I did some estimating as well too. So I have a little bit of information. One thing I noticed that there's not much population of, I guess you could say, foreclosure auctions on looking through April and May. And the reason being because, whatever was, I guess you could say, scheduled has been delayed. And also what typically would happen is any foreclosures in process, when they go through the court system, once they've sort of reached a final judgment, they typically assign a sale date 30 days from the final judgment date. So, if the courts weren't processing stuff in March, April, May, and June, then we're not going to see as many auctions. Even they're not even on the schedule to be postponed. That's the point here. So they're not even making to the schedule. So I'm estimating we're probably looking at 500 to 750. And this is just Hillsborough County, which is Tampa proper. If I were to add Pinellas County, which is the Tampa Metro, includes Clearwater, St. Pete's, a little bit north, Newport Rich area, Pasco County, we're going to be over 1,000 to 1,200 for sure. Just kind of again bubbling under the surface, just ready to balloon and pop once things sort of go on. So that's again just giving you sort of perspective, and this is data that I can pick up, either I have subscriptions to or I can get at easily. The next one, which is fun and interesting, this is New York City. So this I've sort of subscribed to did a trial here for a data service up in the New York burbs, and if you take a look at the information where the red arrow is, you can see that it says there's roughly 29,725 properties in the past 2.5 years that are in a pre-foreclosure setup here. So you take a look at 2.5 years. And again, I couldn't separate this up, but that's roughly 30 months. We're almost at 30,000 filings, so we're looking obviously 1,000 a month are coming in the overall New York City area on average. And I would hesitate to guess that there's probably, because of their judicial foreclosure state, they probably have a bit of a backlog, and there's probably I would say many properties going through the process. As far as what's been canceled, probably over 1,000 to 2,000. That's my guesstimate. It's based on the numbers they're showing here on the pre-foreclosure side, and that's through the sort of New York City area. Obviously, this is just Queens, Brooklyn, New York City itself. There's I don't know all the boroughs and burbs personally. It's not Nassau County though, but so it goes to show you that there's a lot going on, all right? And this is happening now, and this was happening before all the moratoriums came into place. So when we take a look at potential foreclosure volume, it's there, it's ballooning. And, even though there'll be reports saying, well, we haven't increased. Well, of course we haven't increased, because the most recent data that they're reporting on is over, guess what, the time frame of March and April, where nothing's happening. So everything is status quo. So we're not seeing any new increases. We're not seeing any new auctions. We're not seeing new foreclosure filings. So again, because nothing's going on from the federal government, from the lenders, etc. Everyone's kind of holding fast on doing anything with respect to the foreclosure filings and processing, just because a lot of it would be bad public relations to have people put out in the street, or to file kicking people when they're down, etc. So, but my point to all this is, look, there's volume here, all right, and this is just a small snapshot of what's going on across the country, but at least it's like, listen, stuff's happening, all right. I would assume every major city is going to have larger volumes and everything kind of ballooning and bubbling, and it's going to be problematic in the next little while here. Now, as I said, this is all before the COVID-19 pandemic, so this is stuff that was in process or scheduled that everything stopped now. So you can't blame these numbers on what's going on now, and that's an important point, as we're going to talk about in a second here. So this does not include forbearance statistics, all right? Those are not at the foreclosure stage yet. So if you've, if you're in forbearance right now, your mortgage is on hold, and there's no notice of default, notice of sale, pre-foreclosure, list pendants, foreclosure, however it plays out in your physical location, state, city, county, none of that's happened right yet. You're not a statistic with respect to foreclosures and being counted and stuff that I'm looking at here. So that's going to be stuff for the future. So just realize that forbearance is not a foreclosure statistic as of yet. So the point though is that, so what's going to happen with all of this? So if right now we've got all this stuff that's kind of sitting there, that's in process, it's been halted, bubbling, waiting, what's going to happen to all this, right? What about all the future stuff that's going to hit? Well, everybody is talking about what they call and it literally is the next foreclosure tsunami. All right, that's how it's been being referred to, as a foreclosure tsunami. I'm just taking from what I'm seeing in the media, on email blasts from other investors and people who are that are involved in the real estate investment world. This is what people are talking about. This is how they are talking about what's going to happen in the future. It's not a little bit here and there, not a couple points. They're talking about a foreclosure tsunami. Okay, that's called a tidal wave. All right, for those of you who don't know. So very, very interesting. But this is how it's referred to. As I said, industry experts are predicting this. And when I mean industry experts, I'm not talking about me. Okay, I'm not an industry expert. I'm just someone who likes to read a lot of stuff and kind of knows a little bit about what's going on in the marketplace here. I'm talking about people that are economists, analysts. They're doing financial work out there. I'm also talking about papers produced and I get commentary, quotes from real estate investment firms and also real estate funds who expect this to happen. This is also the opinion of many top investors across the nation. I happen to have a lot of people that I know that are, we could say can fall into the top 5% investors, literally doing hundreds of deals. They own thousands of doors of multi. They do hundreds of deals, whether it's flipping properties, rehabs, acquiring for rentals. This is not your average, people. They are your top 5%. I'll say even 1% of the marketplace who are doing this stuff. So I have a good connection and a lot of people that I can talk to and engage on this. Now, the expectation of volume is greater than before. We've seen Moody's Economics. We've seen Amherst Holdings. We've had groups that are saying they believe that the foreclosure tsunami, when we talk about the volume, that it's going to be substantially more than the amount of foreclosures that were happening or occurred during the last housing crisis, which, as started 2007-8, went on for a few years, kind of bottomed out 2012-ish, 11-12. So, roughly, and again, this tough statistics are tough in this marketplace, especially in the foreclosure marketplace. A lot of moving parts, but we're looking at roughly 8 to 10 million foreclosures were filed back in the day, the last housing crisis, and the expectations that we're going to see at least that, and many are predicting, if not more. All right, forbearance is close to 5 million now. Yes, I will talk about some of that in the next video. Someone will probably, chime in and say, oh, did you see that we actually had a decrease in the forbearance? Yes, we actually had a slight decrease in the forbearance numbers. There could be a number of reasons for that have to be investigated and delved into. Right now, we're just looking at top level numbers here. Is that a good thing? I'm sure it is if you're the homeowner. All right. Forbearance is not all the numbers, by the way. There are people who are not paying their mortgage who will fall into the foreclosure crisis and process that aren't in forbearance plans. And that's not being talked about or accounted for right now, right? As I said, delinquencies are increasing. What we haven't accounted for, and this again is with some inside intel on a number of we'll call it attorneys that I work with as well too, is that there is a massive we'll call it preparation for on the sort of, we'll call it the attorney level, to prepare for bankruptcies. All right, and we're talking both corporate or business bankruptcies and the corresponding personal bankruptcies that will come along with that. So there's a massive preparation for a future of distressed properties out there. About this time last year, I believe I had a video that came out, and it was based on some discussions with, and some, we'll call it was an event with mortgage, lenders, banks, servicing companies, and whatever. And the focus was, what are they doing about handling the distress activity that will increase? So they were already preparing. So this was mid 2000. I remember this. It was in June 2019 when they basically said that 75 to 80% of all the servicing companies, lenders, mortgage companies out there, banks, were preparing and staffing and putting in systems for the expected significant increase in distressed properties. And distressed properties in that capacity is people not paying their mortgage, etc. Could they have predicted a pandemic virus and this going this fast? Probably not, but they were already preparing on a number of different levels for this. So this was to be expected. And again, the issue is, well, did we expect this much in a short period of time? No, that probably wasn't. Nobody probably could anticipate that. So this is where the opportunities will present themselves to us, whether you're buying retail, looking to invest, fix and flip properties, create your own real estate portfolio, cash flow portfolio. There'll be opportunities here on many different levels. All right. So this was going on last year. So this is, again, and I remember talking about this because I saw this and I thought, what, I can see it, because when I look at specific markets and see little surges here and there, there's indications of what's going to happen in the future. And clearly the lending community sees, you've got to realize that, we see foreclosure counts. So we see a foreclosure filing or, an auction or things like that. We see it as a pay count. They see the delinquencies and the non-payments far before it becomes that foreclosure, notice of sale, notice of default, whatever pay count. So they're seeing trends in their marketplace before we even get to see them, in the real world and the statistics that we can pull, which are typically after the fact. So these guys already know what's going to happen, in the marketplace. So again, I just think it was time to say, what, I don't know what to, I know what I believe, and I know what's going to happen in the future. And it's not because I sit here and I headline hunt and I go, hey, well, this is what's going to happen in the housing bubble. It's because of underlying data, of underlying things, because I talk to attorneys, economists, analysts, banking people, Wall Street people, that, there's a lot of preparation going on behind the scenes. I have some client base that has, that I'm working with that really are preparing for this right now. And that's what they're doing, and I'm involved with some of that. So the appetite is there, and the funds are being, I guess you could say, being acquired or already acquired, waiting for deployment for a lot of these groups just for this very reason. So I'm not trying to scare people. I'm just saying that we have to be aware of this. And if you're not aware of it, maybe it's time to be aware of it. If you're unhappy and frustrated at trying to buy a property and getting overbid or just not seeing the value there, then maybe take a look at what I'm talking about here and see how you can integrate yourself into some of these things which may deliver you opportunities to buy cheaper primary residence, put some extra cash in your pocket. Here's the deal. If you have a relationship with the homeowner that's in a situation like this, that's an opportunity to either get yourself a good property or make some money for yourself. And that's what I focus on. That's what this in the background, my plan for the next year, and the stuff I'm going to implement right now. That's the whole idea is to work in this marketplace and do the best I can for either myself, my clients, etc., and people out there. And I always share information. But I just find that the narratives will work against this. And here's an example of this that came out today. And if you're a headline hunter, you're going to say, "Oh, Randy, you're kind of messed up." But actually, here's my mini predictions right now. So let's go to that first here. So this is what I believe is going to happen. That we'll see mini foreclosure waves as the market opens up. So right now there'll be in the next few months, massive release of pent up filings. So all these postponements of foreclosures will hit the market. When I mean hit the market, they'll become, okay, now we're going to set sale dates. So if you're sitting in a property that you've been postponed, and that's great. Once the eviction and foreclosure moratoriums are lifted, and realize that this can't go on forever, all right? At some point in time, stimulus checks are going to run out, okay? And people are going to have to find jobs, and landlords and whatever are going to have to be able to evict people, because that's just the way it goes here. So we're going to see a wave of foreclosure sales happening. All right, we're going to see a wave of both on the auction side and all the notices and new filings that haven't been processed because the court systems really haven't been doing them, to be quite honest with you. All right, so we're going to see that. It's going to come up in a wave. We're going to see sales, or we're actually starting to see sales of people trying to dump properties. I call that acronym TTMAR. A gentleman I used to work for back way before I even did real estate presented me with a contract one day, and he basically looked at me. It was a good contract, and I kind of thought, okay, how can I leverage this? And he goes, "Randy," he wrote TTMAR on the whiteboard, and he goes, I said, "What's this?" He goes, "Take the money and run, because it may not be there tomorrow." So we're going to see a lot of people doing the TTMAR sales going, "You know what, I need to cash out now, or I better get my money out now, because we don't know what's going to happen in the future." And people don't want to roll the dice on that. We're starting to see now, and I'll talk about this in future stuff as well too, significant shifting and relocation of housing markets. So we can take a look at the data. So we already see the trends of the past couple of years, and they will increase now with respect to potential new modeling, new opportunities for not working in the office anymore, or leaving the urban cities. So we're going to see some shifting and relocation from one housing market to other markets, and that will pose some interesting issues as we go along. More waves of foreclosure filings as forbearance plans end. All right, I can tell you that the 5 million approximate number of people that are in forbearance, that not every one of those people will get their forbearance put on the end of their loan and basically get free ride, etc. A lot of those people will not have jobs, will still have financial issues, and they won't qualify to go forward with that, and they will have foreclosure filings. That's just the nature of what's going to happen. There's going to be probably, I would say, at least half at this point in time. Okay, that's going to be hitting at some point in time. 2021 will be interesting, as the volume will really hit then. And again, bankruptcies will contribute, the biz and the personal side. There are delinquencies that are going on right now that we can't track. They'll start hitting the marketplace, and they'll fall into the foreclosure process. Oh, don't forget, we're in June now, and already down in the Gulf of Mexico, we had our first kind of tropical storm that sort of went its way from Mexico up into the Louisiana area, Alabama area, and Mississippi area. And that's just here we are, where it's June 7th or 6th when it was hitting. We got tons of rain where I live. So this is just a starting point. So what happens every year? We do get a few named storms that become large enough that hit a various coastal region that causes some problems. That's going to create more. It's going to compound the issue. We could have other things like the fires in California. Like, we just don't know, tornadoes. So we don't know what's going to happen with the natural disaster side. That's just going to compound issues that are already there and make a bad situation worse. So this is what we have to deal with on a yearly basis now. That's kind of what I'm thinking of my predictions here. So now, with respect to talking about this, well, this is from Adam Data Solutions, and I really want to talk about this because I think it's important that this has to become part of the norm and the narrative out there, guys. The future of the foreclosure market. Industry analysts predicted after an extensive period of contraction the number of foreclosures is predicted to grow rapidly next year. So it's just not me saying this, okay? These are the people that actually, take the data and go through the data and sell the data. And, they're basically saying that, their chief product officer notes that the number of foreclosures could also see a sharp rise over the coming months due to the greater unemployment rates and financial difficulties due to COVID-19. Numbers show that recent applications have risen drastically, and basically, troubling economic factors may mean that many homeowners may unfortunately struggle to keep up with their monthly payments, potentially leading to a higher rate of foreclosure. So they're just trying to be nice about saying things. It's going to happen, folks. All right. Now, this came out the other day too. This is again from Adam. It just sort of adds on to what's going on. They do their what they call their zombie property rates in the U.S. So the zombie property rate holds steady amid the foreclosure moratorium. Well, that's sure it holds steady because there's no new. So I guess properties aren't being sold at the auction. So anything that was in zombie status, and zombie status is basically vacant home that's part of the shadow inventory that's sitting there doing nothing until it gets foreclosed on, and then we'll see what happens afterwards. So these vacant foreclosures, again, they didn't do anything because nothing sold and no new ones were added at this point in time. So it's basically it zeroes out. So they're still there. There's not much of them, but again, I see this increase in the very near future. And just so we get a perspective, they believe that there's about 7,600 and change of these residential foreclosures are been vacated by their owners. And when we take a look at states that have the most, are Ohio at 6.7%, New Mexico 5.5%, Indiana 4.8%, Illinois 4.7%, Iowa 4.5%. That's kind of your sort of Midwest stuff right there. New York has the highest actual number of zombie properties at over 2,000, followed by Florida, Ohio, Illinois, and New Jersey. So basically, and again, when you take a look at Florida, New York, Ohio, Illinois, New Jersey, those are locations that are always, the leaders in the foreclosure foreclosure filing world. So of course, they're going to have, more, they'll have a greater concentration of zombie properties in their neck of the woods. Again, zombie properties. What are zombie properties? In the foreclosure process, but not foreclosed on, that are vacant, and typically they're beat up. You can kind of tell that they're zombie properties. Just as a location, Peoria, Illinois, Cleveland, Ohio, Syracuse, New York, St. Louis, Missouri, and Honolulu, Hawaii are kind of your metropolitan areas with at least 100,000 people that have a greater concentration. So you can see that there's we're going to call it, there's obviously economic issues, but on the flip side, brings opportunity to get your hands on those as well. All right. So just wanting to go into some news here. So this came out today, and this is where I talk about headline hunting. And no states report increase in serious delinquency rates. Oh, that's great. So you're going to go back to me and go, hey, Randy, I saw the headline here, and you're not giving us the right information, because look at this, and there wasn't an increase in delinquencies. You're right, there wasn't, because the month they were talking about was March. All right, so a lot of this analysis, a lot of these articles come out after the fact, when when the reporters get their information, start looking at some of this stuff. They go, oh, okay, the overall delinquency rate in March was 3.6%, which was a slight decline of 0.4% from the March of the previous year. It's the first 3 months of 2020, right? Well, guess what? Things didn't hit moratorium until really, April, if you think about it, right? End of March, early April. So we're going through the third month of moratorium. So with no new foreclosure filings going on, basically, and no sales. So really delinquency rates are again, so I look at this going, so what's the point of this article? Well, again, it's just they had to report on it. Someone wanted to report on it. That's great. But it's a bit misleading, because someone could take a look at this and say, oh, okay, well, this guy, he's talking on YouTube here about all these foreclosures. Well, we don't see an increase, so what's going on here? Well, again, it's the perception and what we're told. And that's a lot of the news, as we know that's the news these days, especially with the housing market. There's a lot of contradicting information that's going on, and it's difficult for people to figure out what's happening in the marketplace. And I understand that. And that's part of the reason why I didn't actually want to put out a video over the past 7-8 days, because I, with respect to the jobs numbers and having that hash out and the forbearance numbers, I'm like, you know what? I need to not, I don't want to overreact to some of this. I want to delve into, more detail to really know what's going behind the scenes. And I took the week to talk to a lot of advisors that I have out there and friends. As I said, these are smart people, attorneys, economists, lobbyists, high level, people running large corporations and with real estate that I know very well. And, I'm confident in where this is going to go based on, what I'm talking about is resonating with a lot of people out there in the marketplace who are really doing real estate and are doing real estate on a fairly significant level. So that is the scoop, everyone. All right. Yes, it's a long video, but it had a lot to talk about today. I know people are out there, complaining, but hey, it is what it is, guys. Lots going on. So time to get in the game. If you're not in the game yet, reach out to me. Time to get in the game from many different capacities, whether you're a primary buyer, real estate investor, real estate agent. There's a lot that's going to happen next little while. And, as I like to say, maybe it's the second chance at a once-in-a-lifetime opportunity if you didn't participate in the previous housing crisis. So there you go. A chance to have some fun. So having said that, thank you once again for the views. Thanks to likes and comments. Please reach out to me directly. There's my real estate. So there's my email up there. Housingbubble2.com is the little landing page to grab a report, which I'll be putting the new one up hopefully shortly. And we can talk real estate ad nauseum. So anyway, thanks very much, guys. Look forward to another video later on during the week. Everyone be safe.